let's talk about the health savings account, or the HSA. Honestly, as an entrepreneur, I never understood what this really was, and it took lots of explaining over honestly multiple years for someone to finally break it down properly. So this is the advice from my accountant and the HSA team, and I want to relay it from business owner to business owner and just show you how I'm using the HSA to save on taxes and do it properly, and also combine it with the benefits plan, which I wasn't using last year, but now I'm back on the benefits plan and I'm using both in conjunction. Here's my best understanding of how to be a healthy, full cup entrepreneur, as you should be doing, but also be smart on your tax write-offs. Without further ado, let's jump in. First things first, is a lot of business owners, including myself at a past moment in my life, I just assumed that I could pay my corporate credit card for my gym membership, physio, naturopath, breathwork coaching, anything around wellness, and that I would get a tax refund because, well, I'm helping my wellness and my health. Unfortunately, and at this point of recording, the government doesn't quite see all wellness as tax deductible, which I think needs to change. I hope at some point, especially when you see this recording, it's all changed. But in the meantime, mid-2026, the way it stands is you cannot get a write-off on those things unless you run it through an HSA. I had no idea what that was, so first and foremost, I went on benefits to reduce this, knowing that at some point I couldn't get the tax write-offs. And I said, okay, well, when is benefits worth it? Well, typically, most of your benefits are gonna go towards dental. So how much dental do you have coming up? Don't just go for an annual cleaning, talk to your dentist and ask, hey, what's some other potential, not just maintenance work, but other things that maybe aren't urgent now, but that I'll eventually have to incur. And if I had $1,000 potential bill that she's like, well, if you want to get it all done within a year, here's what's going to be. That might be worth it to actually understand. And then benefits start to be worth it. I mean, typically benefits $200 a month, about that. So $2,400 a year. You do the math on that. How much will you actually use? First time I got benefits, used like not even a quarter. I'm a pretty healthy guy, but still, I like to be proactive and try different specialties. I was scrambling to try all the different benefits, orthopedics, all the things. Like, this is exhausting. It's the way I was thinking about it, and I'm not getting my money's worth. Now, when I talk to my dentist around things that will actually help my maintenance and have me going there less, started to do the math on that. And I just got more health conscious on thinking that I should be more proactive on certain shots, certain medications, allergy mitigation. That's a pain in my ass. And just in general, maintaining the machine with RMT, chiro, physio, even if you're not injured, these are potentially good things to do. So I'm now going back on benefits, and I'll get usually coverage of up to $500 per wellness specialty or different physicians. And then you've got the other bells and whistles, and talk to your insurance advisor about that. But the point is, benefits could be worth it. So I'm going to show you in this case where I'm using benefits, but I'm still using the HSA as a second layer. Now you might look at this purely from, I'm not using benefits, so now you're really relying on HSA, so it'll even be more of an example for you. But I'll show you both in conjunction, and then of course you can understand how you can use the HSA by itself. For easy math, let's talk about an example. So with dental, generally they cover 80% of the total bill. In this case, let's say it's a $100 dental bill, usually a lot more, and they cover 80%. Okay, great. So I'm now paying $20 out of pocket. So the way the health savings account works, and again, you might be paying $100 out of pocket because you don't have benefits, but in this example, I'm paying $20. And essentially, I as an employee, and they advise not to pay with a corporate card, I pay with my personal card. So I pay the $20 and I say, hey, my own corporation, please reimburse me. I give them the receipt. Your corp will then upload this receipt, which they're going to pay you back with, to an HSA portal. And there's different providers. If you have a question on which one to use, come talk to me. And when you're on there, basically your corporation, to be able to make these $20 tax deductible, it's like putting it through a conveyor belt. The HSA company's like, all right, we'll give you the stamp of approval. It's going to cost you 10%. So really, the corporation pays the HSA $22. Okay? $22, and now they can put it through the system, and the $22 are fully tax deductible. for the corporation. When they pay $22, HSA company takes $22, gives it to the employee. So really just a transfer of money, no new money except for the 10%. But now the $22 on the corporate side, that is tax deductible. Similarly, if you paid $100 for dental, give it to your corp pays $110, you get $100 from the HSA company, but corp can write off $110. It's a bit weird of the way the cash flow has to work, but apparently that's the best way to do it, or some level of that. I have heard that if you pay straight from your corporation for the expense and then it's like you're paying yourself back, they don't recommend that, but I think it's still legit with the CRA. Talk to your accountant. Easiest way is just pay for personal health from your personal bank account, then run the receipt through the corp. That's the main thing you want to do. Then the corp easily gets their stamp of approval. And again, they get the tax write-off, you get your reimbursement, everyone's happy. So that is the HSA in its most bare bones sense. And let's talk about the math, of course, on how much now taxes the corporation could be saving. So with the corporation, if you now fully write off $22, well, corps are taxed around 12%. So really it's a few dollars that you get back for taxes. It's a credit towards corporate income, right? Obviously, if you go towards what's generally a $15,000 limit per year, corporation getting that back, 12%, you're getting about just under $2,000, between $1,500 and $2,000 back in taxes to the corporation. So that can add up. And generally that's the HSA. So again, if you use it in conjunction with benefits, it's much lower of a benefit from a tax perspective. But I think just getting to the practice of stacking both is just a good thing to do. It's prudent. But again, especially if you do not see benefits as worth you paying personally or even through a corporation, then you should really look at the HSA as a backstop on a second layer to get some tax money back and then be incentivized to be a healthy business owner. If you're not healthy, you're not at your best with clients, with your family, with your friends. And even if it's a tough time in the market, and it is for a lot of people these days, you are still expected to be kind, smart, and diligent with your clients, and also quick. So having a healthy practice means that you can show up with a lot of patience and creativity. And that's how you thrive through tough times. So an HSA is a bit of a kick in the butt to get healthy, save some money, and just start to build some personal finances. That's what we're doing here. I think it's more the practice of it that's important. But again, if you're saving $1,500 a year, not bad. So that stuff adds up. It's a vacation somewhere. That's a cool seminar you can hopefully pay for and invest in yourself, wherever you want to put the money. So again, that is the HSA in a nutshell. To conclude, if you want to be healthy, and if you're assuming that you get tax write-offs by putting your health expenses in your credit card, wrong. You are best off looking at benefits or just the health savings account. That's what gives you the stamp approval to make most of your wellness expenditures tax deductible as you work on your health and show up as a better business owner to your staff and your other stakeholders. Thanks for watching and stay healthy.